Gary posted a pretty detailed update on Tesla stock. Many investors get confused about long-term value versus near-term sell discipline. Gary Black just sold some Tesla stock. Every stock you own has a current price and what you think it's worth based on the future earnings or cash flows. Tesla is currently a $175 stock that we think is worth $250. That doesn't mean we think Tesla stock is going to outperform over the next 6 to 12 months. We sell a stock for 4 reasons. Our sell discipline. Number 1, it reaches our valuation target, which would be $250 in this case. Our investment thesis changes. Better risk reward elsewhere is available. Near-term expectations are too high. We could have sold Tesla stock at $300 in 2022 Q4 when management started cutting prices in excess of COGS declines, since it was a change in our investment thesis that Tesla earnings would rise proportionally with EV adoption, which we anticipated was growing at 25 to 30% per year. Incorrectly, we thought Tesla management would see that cutting price got them little incremental volume and would backtrack on the cuts. What we didn't appreciate is that management knew no other way to balance orders and production and kept cutting price even though they got no incremental volume growth. We should have listened to Elon's words that he could keep cutting price until gross margins approached zero, since Tesla could make it up on FSD or other recurring revenue streams over a bigger fleet size. This, of course, turned out to be false for now. We are currently in a situation where management is finally starting to experiment with advertising as a way to communicate with ICE owners of the benefits of going EV. And Gary Black was in Austin recently and he talked to some of the Tesla management, and he was very happy that the Tesla management said that they are working on new campaigns basically, and they are going to educate potential new customers. But he was not told how much Tesla is spending on these campaigns. This may or may not cause them to stop cutting price if orders fall short of production. Meanwhile, 2024 EPS estimates are now down 46% over the past year, from $5.50 to about $3, as management has kept cutting prices globally in an effort to stimulate volume growth. With 2024 volume growth now pegged by Wall Street analysts at 15% year over year versus 2023, and some analysts predicting an actual Q1 year-over-year volume decline from last year's, so 423,000 versus Wall Street still remaining at 474,000 for now for Q1. Our last condition for selling, near-term expectations are too high, seems to warrant a reduced Tesla position given the likelihood of a large stock drawdown as analysts reduce Q1 delivery estimates, or Tesla misses Q1 delivery estimates when they announce Q1 volumes. But investors ask, what about your $250 price target? Why sell if you ultimately think Tesla is worth $250 per share? This goes back to my first point. Our estimate of stock's value does not necessarily translate to how the stock will do. Look at what happened in 2022 Q4. Tesla dropped 55% while EPS estimates dropped just 10%, which means valuation targets should have dropped by 10%. If we can avoid a 55% drawdown for our clients by trimming the position and buying it back later, we should do that. The reason why I don't follow that strategy is because I look at the most successful investors of all time, like Warren Buffett, and he doesn't trade actively. As long as he buys the stock for less than what he thinks is going to be worth 10, 20 years from now, he keeps buying. To counter this negativity from Gary Black, let's take a look at what Dillon Loomis just said. He has a pretty good new post on X about Tesla. Tesla's internal goal is to produce 1 terawatt hour or 1,000 gigawatt hours of energy storage per year. They produced 14.7 gigawatt hours in 2023. Tesla's internal goal is to produce 20 million cars per year. They produced a little bit less than 2 million last year. Let's say Tesla falls 50% short of the goals and use those numbers. So we are about 2.9% there in terms of energy, and we are 18% there already with the auto business. It gets thrown around a lot, but in the grand scheme of things, Tesla is still in the early days. Margins will always fluctuate, but in the end, greater economies of scale will help to propel them higher. when you factor in that Tesla stock has been in a consolidation phase for 3+ years now, it should be pretty easy to see the bull case from here for the next decade. Tesla still only has 4 models ramped in only 25% of countries globally, and only 1 megapack factory producing, not fully ramped, out of at least 12 that will be required to hit half of Tesla's internal goal. This type of scaling just takes time. With a visionary leader, a history of execution, and some of the best talent in the world, if you're doubting Tesla's future as a long-term investor, I think it's time you pay closer attention to who you listen to and reframe your perspective. The past is over, it's done. Focus on the future. It's still incredibly bright, and it's actually very easy to see when you learn to rise above the noise and recognize it for what it is. Very good post from Dillon. But Dillon did not mention Robotaxi, so Stephen McRyan presented a guide to all of us explaining how to be a massive wussy. Number 1, be an analyst. Number 2, exclude Tesla robotaxis from your Tesla valuation model instead of including it weighted by probability. Number 3, explain that you are just obeying the rules. This tactically assigns a 0% probability to robotaxis, which is insane. If someone assigns a probability of, let's say, 1%, I say, okay, you assign a probability, but to assign 0%, I think, is not very smart. If the opportunity were trivial, one could be forgiven for excluding robotaxis, but the opportunity is colossal. To tactically assign a 0% probability to one of the largest opportunities in generations is negligent at best. I, of course, agree. That's it for today's video. I'm having some audio issues, so I'm trying multiple different mics, and I still haven't solved all of the audio issues. I'm going to keep trying, but in the meantime, like and subscribe if you haven't yet, and I will see you in tomorrow's episode. Thank you so much for watching.